Hi, this is James Shug with Westpac London's end of day report for Thursday the 16th of August. Look, just a quick report today. I'll run through the main data releases. The Philadelphia Fed factory survey in the US, up 6 points but still down 7.1. That's the reading. That's the fourth consecutive negative reading in a row, just not quite as weak as the previous one. Orders, shipments and jobs, the components of the index, all remain firmly in contractionary territory. So that means we've got Philadelphia, New York, Dallas and the Richmond Fed factory indices, the latest readings on those, some from August, some from July, all pointing to contraction. This happened last year with these surveys as well. The issue now is, do we get a bounce later this year? Like we saw later in 2011 and indeed in 2010, or is this weaker survey picture going to sustain now, given that our view that the US economy is going to struggle to grow much more than 2% over the next couple of years. Housing starts were down 1% in July. The multiples were up 12, but single family starts were down 6 or 6.5%, and that fall actually reversed half of the gain we'd seen in single family starts over the previous 4 months. So a bit of a softness in that report, although housing permits were higher in July. Initial jobless claims up 2,000 to 366,000 in the latest week, basically running at the sort of level that suggests that there's been some improvement in the labour market relative to the sort of April to June, when we saw claims as high as 390,000. UK retail sales up 0.3% in July. The June numbers revised higher. The annual pace of growth 2.8%, one of the highest we've seen in some years. Basically, a lot of distorting factors at play. We had the Olympics at the end of the month, crazy weather conditions, extensive price discounting in some sectors. A bounce back from the 2 public holidays in June. Very hard to read the figures. The August figures will be hard to read too. The underlying story, we think, in the UK economy is one of flat, maybe slight contraction in growth. But some of the data are going to look pretty good, particularly given the Olympics that will be featuring in most of the data series over the next month or so. We had in China disappointment on the investment side, some figures there showing weakness and also increased bad loans in the Chinese banking sector. That was about it really. Along with Cisco reporting after the close in the US, latest quarterly result that beat analysts' expectations, all of that has added up to a pretty positive sentiment on equity markets, with the London market closing well, pretty much flat, but the French market up 0.9% today, the German market up 0.75%, the Spanish market up more than 4%, and the Italians up nearly 2% today. The Dow at the moment is up 0.75% at 13,263. Commodity markets, we're looking at let's see, copper prices up 1%, oil up 1.25%, $95.51 a barrel, and gold's up about 0.75% at $1,618 an ounce. And the Aussie dollar just above 1.05 against the US dollar at the moment. A little bit higher than it was yesterday. Got to go. Phone call coming in. I'll speak to you tomorrow. Come on, fucking mouse. Oh.
about James,